Hey everyone, welcome to the Your Money Your Life podcast, episode 273 of the pod. Make sure before we get into the episode, you like, subscribe, 5-star rate, and review this podcast. We do this every week. New information, new updates, talking about the markets, talking about a lot of stuff that's going on, and keeping you informed on some of the happenings of the world. So we'll get into it this week. There's a lot to discuss. I do think it was a much quieter week than we've seen in weeks prior. So let's dive into why that was in a second here. First and foremost, let's look at the market. Let's look at this update and see what we're tracking here is the S&P 500. We always kind of look at this ETF of the Spider S&P 500 and showing us the past 5 days, which ended up being flat. We had a lot of volatility, and people again don't understand what volatility is. They don't understand that the markets don't just act in one way going up or one way going down. There will be swings in the market, and that's what's normal in the market. And the swings in the last 5 days actually led to us being slightly up 0.7% over the past 5 days. If you look at the 1 month marker, still down, 6 months still down, year to date down. Over a 1 year period, we are up, have bounced back from those lows we saw on roughly April 7th. And we've had a little bit of volatility, but we jumped up from those lows. And of course, if you widen it out 5 years, this looks like it's going to be a blip. It's going to be a speed bump when you pull this out and you zoom this chart out, it will look like a speed bump in a few years. Um, Futures this morning slightly up. There has been talks about the White House saying there's been, opportunity for China and the U.S. to talk, but the China said there has been no conversations and there won't be for the foreseeable future. So that's a quite interesting update here. Let's look into it. Stocks were boosted on the hopes that the trade tensions between the U.S. and China would ease. Earlier this week, President Donald Trump said he is willing to take a less confrontational approach toward trade talks with Beijing. Further, Treasury Secretary Scott Bessent said Wednesday that the U.S. has the opportunity for a big deal on trade. Chinese imports are subject to a U.S. tariff of 145%. But investors are waiting for any signs of tariff negotiation. We're left disappointed. Investors that were waiting for that were left disappointed. China said overnight that there were no trade talks taking place with the U.S., and their Minister of Commerce spokesperson said that all sayings regarding progress on bilateral talks should be dismissed. So he's pretty much saying that we ain't spoke. But you know, there are tones that there's potentially maybe the White House will pull back, which I don't know if that's going to be a good thing in the sense of once you pull back, you've lost all leverage, and now you're pretty much at the behest of the other side. But we'll see, and maybe that's just what has to be done. But there has been no talks yet. That's the official report from CNBC as far as there has been no talks. I think that's going to be the linchpin in the economy. It has to have some conversations for us to be in a situation where the market will have some more clarity and some more surety on what to do going forward. So huge news on that front. We'll keep watching it. Um, you know, the president also said that he has no intention of firing Federal Reserve Chairman Jerome Powell, whose term at Fed chair will end in May of 2026. This seemed to boost sentiment in the markets. The market seemed to like that. Again, surety, predictability, things the market would like to see, being able to have demand from consumers, things that the market would like to see. And so those things are playing a part in the market right now and playing a part overall in the economy. So those are the things we have to keep our eyes on going forward. If the trade talks happen between the US and China, if we keep a little bit more stability in the market and CEOs, which are announcing earnings right now, can give guidance with surety, and they understand their business models, obviously, but can give guidance on the general demand for their business with a lot more surety. And that will take a lot of clarity on the trade war front, which is the biggest thing right now. In other news, OpenAI is eyeing 174 billion in sales by 2030. So that's a pretty substantial number, 174 billion in sales by 2030. ChatGPT powered OpenAI to the forefront of the artificial intelligence boom, but new products are largely fueling its long-term revenue outlook. according to internal documents viewed by the information. Total revenue is projected to surge to 125 billion in 2029 and 174 billion the following year. That's from 3.7 billion in 2024 as sales from AI agents and other products eclipse those of ChatGPT subscription revenue. Um, and that is expected to jump to 50 billion in 2029 from 8 billion this year. So they're pretty much saying they're going to grow rapidly. They're going to build AI agent products. They're going to build, they're going to increase subscription. They're pretty much predicting in internal information that was viewed by the information that they're going to grow rapidly. And again, this is still a private company, a unicorn, obviously, meaning a private company worth over a billion in valuation. And they're saying that they're going to really bring agents new products and they're going to really hockey stick growth is what they're predicting. I do think that they're going to have incredible growth. If you see how, like, the thing about AI that's interesting is like it got better. I've been using it since 2022, 2021, and it wasn't that good back then. It gets better because it's training itself on data, your inputs, everyone's inputs, the data. It's training itself, and so it's like a weird thing where the product gets better the more you use it, the more it's worked on, the more it learns. And that's for all AI language models, actually. It should be, if they're good, they get better the more they're utilized. And so that's the interesting thing here is that's why I really believe in the growth because these things get better the more you utilize them. And so that's understandable to me when it comes to the growth. Tesla, on the other hand, is not growing. They're planning to slash spending plans. Tesla appears to be scaling back its spending plans after reporting a 71% plunge in profits. This is the regulatory filings they made Wednesday. I think they had, of course, reported earnings. The EV maker is allocating more than 10 billion of capital expenditure this year, down from the more than 11 billion it was planning to spend just 3 months ago. Elon Musk admitted on an earnings call Tuesday that the company is struggling amid higher tariffs imposed by the Trump president and vowed to take a step back from his government work. So yeah, the company came in reports and it wasn't good. Top line, bottom line, not looking great. Tariffs slash loss of demand. He's in strife. His approval rating, even though he doesn't have one as far as the president, but I think they did say like that there was a Tesla approval rating that they put out a survey of and it was low. And so he's dealing with a lot of that. And so he's taking a step back from his government work to try to right the ship of this company. And that would make sense to me if you're looking at cutting spending, they have lower demand, they have a host of problems. Their EVs, their cars that are from their China plant coming back to US are the tariffs put on that are insurmountable almost. So he is definitely going to have to cut back. The company is struggling, and they're taking a step back from their projections about growth because they see the demand erasure that's happening, and that makes sense. Let's look more into the numbers. The revenue fell 9% to 19.3 billion. Profits were down 71% to 409, driven by a 13% drop in deliveries. Challenges like brand backlash tied to Elon Musk's Doge roll and looming tariff impacts are testing Tesla's resilience. He said he's going to scale back his work on Doge and refocus on Tesla, his biggest public company that we know of. And so that's the big news, and that's big news in there. That certainly is something he would definitely have to do. Let's move over to college and this college grads search. So college grads for the class of 2025, the post grad job picture looks iffy. Employers now expect to hire the same number of graduates they did last year per one survey versus the 7.3% increase they projected just months ago. That's the most annoying part I would say about like for undergrads. You're just at the whims of the economy. You haven't built the skills yet. You haven't built all these things, and it's entry level jobs, and you have to have the jobs you have no experience entry level. You have to be at the whims of the economy. If people need someone doing entry level work, usually entry level work is something that can be slashed or increased based on how the company is doing. It's not a needed, necessary thing. But let's go back to this. Thanks to widespread cuts, government jobs are hard to come by. In the private sector, many companies are moderating their hiring. But there are some bright spots. Energy, manufacturing, and software product firms all plan to hire more recent grads this year. Okay, so those places are growing. So those would be the areas. So yeah, if you're stressed and trying to find a job, understand that this will pass. for the job market. It will take a while. You have to hustle a bit harder. It's unfortunate timing for the recent graduates, but it will turn. So just keep your head up, keep plowing through, polish your resume hard. I remember my first ever interview years ago. I forgot to bring my resume. No one ever told me. Forgot to bring my resume, but guess what? It all worked out many, many years later. It worked out really, really well for me. Um, mortgage demand dropped slightly. Applications for 30-year fixed rate mortgages declined almost 13% last week compared to the week prior, according to the Mortgage Bankers Association. The steep dip comes as the average interest rate on the 30-year mortgage hit a 2 month high of 6.9%, causing refinance applications to plummet 20% week over week. In the meantime, home prices keep rising. So, um, this makes sense. I did look at the 30-year mortgage chart, and I think mortgage rate chart for our YouTubers. We're diving in, and you see that it did increase. Let's go to the 1 year. Like, yeah, look at that increase. So we were sitting around this time for a couple of months, and then boom, you just see that jump. And that's because the bond yields jumped. That's because of pretty much primarily the bond yields jumped and the mortgage rates followed. So we were pretty high here in January. And then we started to dip rates, bond yields, all those different things coming down. And then boom, we did have that jump. So that's really what's leading this. It's fairly simple to see. And obviously, refinancing drops when the rates are going up. The refinancing is going to obviously drop. Applications are going to drop as well. It makes sense. I mean, rate increase hit refinance demand hard. Applications drop. And so you're just seeing those rates go back up. A lot of things are input into that, but interesting enough question or interesting enough to look at. Anyways, let's move forward and let's see what else there was. We talked about Tesla earnings um, recently. Let's see if they had any more information in this article. Last quarter's promise of return to growth in 2025 doesn't appear to be in contention as the announcement no longer mentions that return to growth. So Tesla was saying they're going to return to growth in 2025, but doesn't look like they are. Set aside the regulatory credits the company reaps as well as its interest income, and the company generated a pre-tax loss of about 200 million in Q1. So they do get regulatory credits of some nature that I guess Obama put into place, President Obama put into place. But if you take those out, they actually have a pre-tax loss of about 200 million in Q1. The company says its plans for the robotaxi launch and less expensive vehicles remain on track, so they're going to still launch a robotaxi and less expensive vehicles. So yeah, that's enough on Tesla. Chipotle Mexican Grill is opening for the first time in Mexico. That's pretty cool. Chipotle is opening for the first time in Mexico as prices of produce imported from Mexico are expected to rise on President Trump's 25% tariffs. Chipotle has been on a mission to find avocados from alternative sources. Opening restaurants in its primary supplying country not only keeps menu prices low in stores in that region, could also hedge against higher costs domestically by staying close to the source. Interesting move. So Chipotle is making their moves to combat tariffs, so they're opening their own store in Mexico. That's pretty wonderful. Chips, we talked about them a couple weeks ago. Nvidia, um, Nvidia is trading at a more favorable valuation now. Forward price to earnings ratio of 20.5x. This is about 6.5% higher than the S&P's multiple of 6.5% higher than the S&P 500's multiple of 19.25x. But if you take a step back, that's Nvidia's smallest premium since early 2026, so 2016, excuse me. So again, the valuation is pretty much saying that they're trading on a price to earnings ratio that's the lowest it's been since 2016, back when its sales from gaming were 10x its data center revenues. So it was 6.5% higher than the S&P 500 yesterday, but it started out the year 59% higher, and last year maxed out at 241% higher. So the valuation has come way back in line for Nvidia, which probably needed to happen. It was flying. The stock was flying, but now the valuation is trimmed become more favorable for investors at entry points here. If you believe in the company long term, it's a lot more favorable than it was prior. Um, not a lot much more. We did go through a lot of good stuff. Let's see what there is for questions of the week. That's probably our next thing here that we want to dive into. See what we got for questions. If we got anything good, and I think we do have some good things. Let's see. Last year, I really liked the questions last week. So, okay, this is an interesting one. Identity theft coded. How long does it take a hacker to brute force crack a 7 character password? This is a good one. How long does it take a hacker to brute force crack a 7 character password? Brute force crack, I don't know what that means, but it just means crack. I would say 30, 40 minutes. I don't know. What between 4 seconds and 1 month. So that's a big range between 4 seconds and 1 month, depending on the password characteristics. This calculation that they said includes a few assumptions, including that you don't use dictionary words or repeated words. But they have a whole chart here on the time it takes a hacker to brute force your password in 2024. Like there's some instantly interesting. This is good to know, people. We got to keep our stuff secure. Next question. Let's focus on credit card debt for this one. What is the average credit card balance among those carrying a balance? Average credit card debt among those carrying a balance. I already saw the answer, unfortunately, but say the guess in your mind. What do you think it is? And the answer is $7,236. The total outstanding credit card balance is 2008 to present. Um, Kind of ballooned here in the '08. It was like roughly around. So this is the total outstanding credit card balance. We're doing in billions, seasonally adjusted. So this is like trillions of dollars here. We've really increased that here in 2021, really heavily increased. And so credit card balances are at the highest levels they've been in a while. So I'm sure the credit card companies are incredibly happy. But the balances are moving. And what do you guys think about these buy experiences on credit? So these pay pay laters, you guys know them. I think there was. Did we talk about that article where Coachella was like 60% finance for people that attended, meaning you could pay in installments over 3, 4 months? What do you guys think about that? Is that worth? Does that make sense? An interesting pattern there we were seeing with buying on credit versus not. But that's to be seen. Folks, we're wrapping up this episode. We have a big weekend again for myself and my wife. We have a busy, great weekend ahead for New Street Sports with, of course, draft weekend. Of course, New Street Advisors Group as well. So please stay tapped in. Share this with your family and friends. We do this every week, and we will see you next week.